You were listening to chartingwealth.com for Tuesday, the 1st of May, 2018. We see the week starting off on Monday with stocks down. That is the S&P 500 and the Qs, the NASDAQ 100 down around 0.7%. We see that 20-year bonds up 0.18%, gold down 0.73%. Now, we see on the S&P 500 for the day, even though it was down, our Heikin-Ashi candlesticks, that's the average pace candlestick, shows us that we have a green spinning top. Now again, it's very close to a doji, which means basically opening and closing at the same spot. It is, however, a green spinning top, and of course, that means lots of indecision, as we saw the prior week, how it wrapped up with a red doji, again for the entire week, meaning that the market, the average pace of the market was basically opening and closing about where it started. Again, tending down for that week. We see the derivative oscillator losing downward momentum, continuing to do so. It's just the first day of the latest weekly candle, but the price percent oscillator, our king of indicators, is actually still heading down. That's the main one we look at. We use everything together. We use all the charts all the time, all the indicators all the time. And what we see happening at the beginning of the week is downward price movement, lots of indecision on that weekly chart, but it's only the first day of the latest two-day candle. Now we saw that the prior candle, and we've just had a new one finish forming. It represents Friday and Monday. And what we see is a green spinning top. The prior one, ending the 26th of April, was a red down candle, and the one before that, ending the 24th, was a red down candle. So we now have, again, another green spinning top. Not as much indecision as a doji, but still indecision tending up, however. We do see the derivative oscillator continuing to lose energy, and the price percent oscillator is pretty much flat. So again, we see sideways slippage and indecision on the S&P 500. Again, going back to that weekly chart and looking at the two-day chart, tending up on that indecision. Now let's dive a little bit deeper, as deep as we tend to get. That's the 4-hour chart. We saw up movement in the morning on Monday, and then down movement in the afternoon, just piercing the weekly trend line. Now, remember, the weekly trend is down. The two-day trend is still up, although it's, again, sliding sideways. And we see on that 4-hour chart, we see that it bounced off the red signal line in the morning and headed down in the afternoon. Now, we'll see if there's going to be enough downward pressure to rotate that two-day chart over going down and maybe open up a position for jumping into a down move on the S&P 500. Hasn't happened yet. We'll continue to watch and wait and see what we see on these charts. Okay, back from the 4-hour to the weekly, going on to the Qs, the NASDAQ 100. What do we see going on there? Somewhat similar to what we saw with the S&P 500 prior week. Indecision so far this week. Indecision tending up. Derivative oscillators losing downward momentum. Price percent oscillator still headed down. So we'll continue to keep our eye on things there. We look at the two-day chart. We see, again, not being able to penetrate, even with that up movement on the latest two-day candle on the NASDAQ 100, isn't enough to be able to push over the red signal line. So still in a confirmed down move on the two-day chart. Derivative oscillator losing upward momentum, hasn't crossed over yet. And the 4-hour chart, again, sliding sideways. Looks like it's trying to move over, coming down, but the price percent on the price percent oscillator, but derivative oscillator still in an up move. Now, one thing to keep in mind with the 4-hour chart, my friends, is don't forget the two-day chart is still confirmed down. So if things on this latest 4-hour candle, if you see things crossing over, going down, and it's still laminated there, you might have the opportunity for jumping in on a down move on the Qs. Now, do pay close attention to the derivative oscillator still gaining upward momentum, which is a bit of a concern. But again, if things start to drop over in the morning, you might have a jumping in point on Tuesday on a down move on QQQ. Of course, we urge you to practice trade everything you possibly can, learn what you can. Remember, we're now in May. What does the market tell you? Sell in May and go away, live to trade another day. Why? Because a lot of the volume starts leaving the markets as we get into the summer doldrums. And remember how easy it was to track these markets in the fall-winter trading zone when the moves seem to be clear and move strongly in one direction or another. Well, we get into the sort of the herky-jerky summertime doldrums. Not to say that you can't trade then, and it's some of the best time for you to practice because you're going to learn a whole lot of things trying to trade in an environment that is very difficult. When it's easy, and when it's hard, it really makes a much better trader out of you. So practice everything you possibly can. Okay, that is where we are with the Qs. We're going to go back to the weekly, and we go to TLT on the weekly chart. What do we see going on there? Well, we didn't have a weekly vertical crossover that we thought might occur at the end of the week. Things have slid sideways so far. We have pretty much a green spinning top doji almost, not a lot there as far as the week and the opening on just the first day of the latest weekly candle. What do we see going on? Derivative oscillator losing upward momentum. Price percent oscillator still positive. So again, still positive. Let's take a look at the 2-day chart. It crossed over going down back on the 2-day candle ending on the 20th. This latest 2-day candle is a green open box, no wick on the bottom with a wick on top, which typically means decent upward momentum. However, derivative oscillator still negative, price percent oscillator still negative. So keep that in mind because TLT still in a confirmed up move on the weekly. So if there is continued up movement throughout the course of the week and you have a crossover going up on this 2-day chart, you may have the ability to start looking for an up trade. Remember, the 4-hour chart crossed over going up back in the afternoon on Friday. And in fact, we've got about 3 days worth of up movement so far. Derivative oscillator and the price percent oscillator crossed over at about the same time. Derivative oscillator gaining upward momentum. Price percent oscillator headed up. So keep your eye on TLT. We'll see how things shape up. And if indeed this, so again, remember, we've got the 4-hour chart is currently moving up, the weekly chart is moving up, and the 2-day chart is moving up. The 2-day chart, however, is down. Forgive me. Somehow we've lost our candle here, but we want to see this 2-day chart rotate over going up, and when it does, it might open up some trading potentials for us. So, and again, the weekly could cross back over going down. We thought that was going to happen in the last week and might open up a downward trading potential. So we've got nothing right now. We're just continuing to keep our options open and watch and see what we see. And we're going to redraw that 2-day arrow so that we don't get confused. We'll put that back in there. Don't know where it went to. What's going on gold right now? Well, gold was down for the day 0.73%. Now remember, gold is currently on this weekly chart in a confirmed down move since it crossed over going down back on the 16th of March. It then went up for about 4 weeks and started moving down on the week ending the 20th, strongly down on the week ending the 27th. And that's when during that week, the 2-day chart rotated over going down. And so far this week, our Heikin Ashi candlesticks, just the first day of the latest 2-day candle, is down on gold. We see the derivative oscillator gaining downward momentum, price percent oscillator headed down now. As we look at the 2-day chart, what do we see? Well, of course, it crossed over going down back on the 24th, and we have 3 nice, strong down candles, and we can connect pretty much all 3 of them pretty well going down. And then, of course, as we look at the derivative oscillator is gaining downward momentum, so is the price percent oscillator. We look at the 4-hour chart. It is in a confirmed down move. So what are we waiting for? A bit of a pullback on the 4-hour chart so we can find a jumping in point for the down move. It's nice to see the 4-hour chart actually working pretty decently. It's been quite a while since we've seen it do much for us. Remember, since we're using oscillators, the derivative oscillator and the price percent oscillator, we've got to have oscillations. We've got to have movement. And of course, with sideways sliding, doesn't work, we keep hoping that gold will get back to working again, because this 4-hour chart was a great trading chart for us for about a year and a half, and then it stopped working a few months ago. If we can find some good, decent trends where it rotates over and moves in that direction as it did back on the 19th again and again, we might start trusting it. That's where we are on gold right now. Again, continuing to wait for a pullback here so we can find a jumping in point on a down move. That's where we are, folks, as we begin the week, first day, and we go into the new month on Tuesday, the 1st of May. Don't forget, we have our book, Charting Your Way to Wealth, ready for pre-ordering. Please, you can go to the emails that we send you. You can go to the website chartingwealth.com. Under the notes and the postings every day, you'll find links also at our YouTube channel to the website where you can actually pre-order our book. And you can also order, we just sent some out today, either a quarter's worth or a year's worth of our trader journals. We have those in stock and are happy to send those out to you. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.